So it is February 26, 2025, and rates have fallen just mildly today. So the 30-year fixed rate has dropped by 9 basis points. They are now at 6.35%. And the 15-year fixed rate is down by 13 basis points. It's to a 5.64% interest rate. I haven't seen an interest rate in the fives in a very long time. That's an almost 11-week low, and it's the cheapest reading of 2025. Yes. Interest rates are coming down slightly, but I'm not sure if they're gonna stay this way. If I knew and had a crystal ball, I would definitely be a billionaire, which I am not. So rates are pretty much holding steady. My advice to you is to just keep an eye on your news source. Just wake up in the morning and check, financial news, and just keep a close eye on it. And they may dip a little, they may come back up, but basically economists are saying that we're not going to see a huge plummet. Don't expect to see rates in the 2s or 3s like we did in 2020 and 2021. They pretty much will hold steady, but I like to look on the bright side of things. I am an optimist, not a pessimist. So if mortgage rates go down a little and they're just making just a little change, that feels like a relief to me as a realtor, because I have your best interest at heart. And I obviously would love for you to get an excellent rate. But like I tell all my clients, what you pay per month, what your mortgage will be, is more important than what the rate is. So it's definitely a time to get creative and get in front of your lender. Definitely talk to him or her about your options. And I'd love to meet with you. We can meet for coffee and talk about some of the ways that you can plan for getting ready to buy and just planning ahead. Because when that time comes and interest rates go down, the market will be saturated with buyers. So there are a lot of pluses to buying now, and I will go over what those are. So factors that can affect mortgage rates. Number 1, credit score. Not everyone is going to get the same mortgage rate because that is based on how well your credit is doing. Number 2, down payment. The amount you put down on your home affects your rate. Number 3, the size of your loan can affect your rate. 4, loan type. Fixed rate loans have a consistent interest rate, while adjustable rate loans can fluctuate. The property's location can also affect your rate. And then, of course, economic factors. Inflation, the Federal Reserve, and investor appetite all impact mortgage rates. And lastly, lenders. Lenders set rates based on their own supply and demand. You can consider locking in your rate to protect against future rate increases, and considering mortgage points, which can reduce your interest rate. So when you get a mortgage rate quote, you can get loan estimates from lenders to see what terms you might qualify for. So again, that's figuring out your buying power, getting all of your information to them, your pay stubs and all the other documents that they need to approve you. I would get that done early. So I have many preferred lenders that I work with, and I can refer you to a couple of them, and you can choose based on who you like to work with. You can compare rates from multiple lenders, but I would definitely secure your lender before you start shopping, because lenders hate it. They really dislike it if you rate shop after you're already under contract and after you've already had them put in a lot of work for you. It's only fair that you do your sit down meetings with your lenders, kind of lock in a rate or get an idea of what your rate will be before you cause your lender to do a lot of paperwork for you. It's kind of unfair. Like realtors, lenders work on commission. Most lenders work on commission. So you just want to be thoughtful when choosing your realtor and choosing your lender, because those are really big decisions, and you want to feel comfortable with both of those people. And then you want to feel comfortable with the company, their loan products, and the interest rate. Unfortunately, the reality of a slow market is that houses will sit on the market longer. Days on market are a lot longer than usual, and sellers will get anxious and want to make adjustments. And sometimes that looks like making a price reduction. There are other opportunities in this market. You can ask sellers for help with your down payment, help with closing costs, playing with money here. Most times sellers want to net a certain number. So if you ask them for closing costs, but pay maybe a little bit above list price and they're still netting the same, but then you're getting your closing costs paid for, it's a win-win for both sides. If you're thinking about buying a house or refinancing your current mortgage, you are not alone. So if you have some hesitation as to why you're not wanting to buy and all of your reasons are pointing towards interest rates, I would definitely encourage you to sit down with your lender and maybe talk to him or her about what you can afford. So knowing your buying power is huge before you get into the housing market, because it can be competitive if it's a hot house and there are other offers. So you definitely want to know your wiggle room, like where you can pull money from and what is your max budget. Then that really gives you all of the power when you go to buy, because you can really know like how much you actually can spend. And you definitely want to be comfortable with your mortgage payment, so you want that to make sense. But I would say that we're kind of in a buyer's market right now. It is slow, and sellers probably won't like hearing this, but unfortunately, there's a lot of opportunity in a market that is slow like this. So here's what the markets are now predicting for 2025 Fed rate cuts and what this could mean for mortgage rates. So in January, the Fed opted to hold interest rates steady, ending a succession of 3 consecutive rate cuts in late 2024. However, renewed reductions could be coming, with financial markets currently pricing in at least 2 rate cuts by the end of this year. How that will affect mortgage rates is a little murky, as the Fed rates is just one of many factors that influence mortgage prices. In fact, mortgages and the Fed can move in complete opposite directions. So over the last 4 days, we have slid down 20 basis points. 20. That is huge. All right, well, this was a lot of information. I definitely just wanted to get on here and just introduce myself if you're new to my channel. If you are thinking about purchasing a home this year and you're in the Clark County, Cowlitz County, Multnomah, or surrounding areas, really, I should have just said Vancouver, Washington, and Portland Metro, I'm here to help. My name is Molly Lang. My company is Molly Lang Realty, and I hope that you stay and follow along with my real estate journey. I hope you think of me when you go to make a purchase or if you need to sell a house. I hope you enjoyed my video, and if you don't mind hitting the subscribe button and the like button and comment if you'd like. Thanks for tuning in. Take care.